Hey everybody, it's Jonathan. So when I'm doing technical analysis, I want simplicity. I want something that's really straightforward. I personally think people get themselves in a lot of trouble when they have so many different lines and indicators and noise on their chart. So what I'm always looking to do is I want to find my line in the sand. I want to find that one level above bullish, below bearish. So let me walk you through. Whenever I'm doing technical analysis, I always want to use the most amount of data first. So here I'm starting on a weekly of the S&P futures. This week, the low, 52.75, it's pretty much the same as the previous week of 50. If I take it down to a daily, we can open this area and you can start to see, right? This area right here, the market's having a really tough time with. This is a daily chart. This is a lot of data. So for me, I'm going to use that one area as my line in the sand. And it doesn't have to be to the tick, right? The market's never going to trade like 57.50 is the support. And if it gets to 57.25 or 57.00, it goes through. No, it's just a guide. So usually what I want to do is create like a band. So if this is 57, say between 52 and 57, that band. Any sustained trade above, I'm bullish. Because I'm bullish, the equity market, if we stay above this major level, that would also make me bearish volatility, right? Because when the market goes higher, the VIX goes lower. It's pretty commonplace. If this level doesn't hold, I'm no longer going to be bullish. At that point, I'm going to be bearish. And again, I'm going to be bullish volatility because when the market goes down, that's when there's more risk in the market, more uncertainty. The VIX goes higher. If I'm bullish the VIX, bearish the market, that's when we want to buy options, buy calls, buy puts, buy straddles, buy debit spreads. If we're bullish the market and bearish the VIX, well, covered calls. Buying stocks, selling upside options, trading S&P futures to the long side. The point is, it's hard enough to figure out if the market's going higher or lower. What we don't want to do is, I think the market's going to go higher, up 10 points, and then I think it's going to fall 4 points, and then I think it's going to rally 6 points. Then you kind of feel like you're Giuseppe with Pinocchio on your hand, and you're trying to make the market dance exactly how you think it's going to. Come on. The probability of that is very slim. Let's keep it simple. One line in the sand, above bullish, below bearish. But let's not, I think the market's going to rally 10 points and then break 4 points and then rally 12 points. Come on. Put yourself in the best position to succeed. The best position is going to be through simplification of your entire process. Hope that helps, guys. Jonathan Rose, active day trader.